It's Clay Trader, and this will be a video chart on ticker symbol RLOG. We'll take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this may look like several days worth of time right here, it's actually just today's price action broken down into 30-minute time slices. I like to do this time frame. I think it does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. And in this case, it's kind of a tricky one because, hey, Clay, what do you think? Well, I don't know. It's all about perspective. What do I mean by that? Well, if you're a day trader and you bought right there and you wanted to sell within, 3.25 seconds, then yeah, for you, the chart's looking pretty rough. But if you care about the big picture of things, the overall perspective, then yeah, it was a deep pullback, no doubt about that. But again, taking a step back and looking at, the broad scope of things, the bulls do still have a chance to build a higher base. And that's the name of the game from, the big picture perspective, building uptrends. And those are all done with those higher bases. So in terms of, kind of the higher base and how that still has a chance to be done, that's where this initial area of support comes into play. And that's right here at $1.30. $1.30 was a previous area of resistance, as you can see right there. And this is just a foundational rule in charting. When levels of resistance are broken and closed above, you want to see them act as support. So again, was a level of resistance when it was broken above. Now you'd want to see it act as support. And you can see on a couple different occasions, the bears try to press down below there, but the bulls did a good job of holding in both of those instances. So yeah, preferably speaking, you definitely want to see the price stay above, this $1.30 level, because when you stop and think about it, well, the price, if it just bounces around here a couple of times more before heading back up, even at that point in time, you'd have a this base of lows here, you'd have that base of lows there, you'd have that base of lows down there. If you picture each one of those as stair steps, well, hey, the stair steps would still be going in the upwards direction. And again, from the big picture perspective, that is the name of the game. Now, what about levels of resistance? So if this upwards move is going to, get back up into the 240 range, where are some of these hurdles at? Short-term area of resistance, kind of that, hurdle that's not that far off. I'm going to call it right there at $1.55. After $1.55, next key level up there at $1.80. After $1.80, that's where you can start, it makes a little bit more sense, again, to start talking about the price getting up above $2. But at this point, there really shouldn't be any talk about over $2 until the price can, first show that it's strong enough to break these couple levels of resistance. But again, I don't want to come across like the price has to break levels of resistance tomorrow or it's a terrible day. At this point, top priority is just building a higher base, going through a healthy consolidation. So we'll see how the price closes out the week tomorrow. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point. And like I say, it is free. Thanks for watching. Have a good one.